Okay, Los Angeles Trade House family, Chuck here. I just wanted to discuss something that we talked about last night and kind of give you guys a real world example. Last night, when I got home from the trade house, I discovered a Gartley pattern on the 30-minute GJ. Okay, we talked about how powerful the harmonic patterns are and why we should really be taking advantage of the scanner. This is a Gartley on the M30 now. This isn't going to be on the scanner. Scanner has M15, H1, H4, daily has M5 and M1. Okay, but I'm working on really learning how to understand these patterns and draw them myself. So this was a Gartley on the M30. Okay, now this is a sell, so we have the D at the top, which means we're looking for a reversal to come down. All right. One of the things we talked about last night is checking for divergence, right? So we changed our RSI, especially for us scalpers that are trying to get in early. We changed our RSI to 3. Where did we get that information from? Clint Eastman, 35-year vet, told us that it is actually, if you want to catch the move early, you want to get in on the 3. All right, now RSI. So I changed my RSI to the 3, and on the 3, where the X is, from the X to D, you can see that the price action is moving down. This high came, and then we had a lower high, right? Well, over here on my oscillator, on the bottom down here, this is where we're at. We're right here around 7,300. And then when we come over to the D, we're over here around 94. Okay, so we're moving from 73 right here to 94, right? And so what do we have here? X to D is going down while this in the oscillator is going up. Even if I had it on the traditional 10 or 14, let me just show you guys that really quick. We still see the same thing. Okay, so I want you to know that divergence would have been present either way. So X down here to D. All right, and what does divergence tell us? Divergence is a sign of market exhaustion. Okay, market had been rallying up to here, and then we had a reversal pattern show up, and we had divergence. Okay, there's never going to be a true reversal if you do not have divergence. All right, so divergence was key to this. Now, we introduced the SARS this week, right? We are talking about his bounce back. So for me, this is a 30-minute. We can drop down to the 15, the 10, or the 5, okay, for our entry. So when we drop down to the 5, we can see something here. So I'm going to go back in time before this drop happened. Okay. Now when I drop down into the 5-minute, we still have that same divergence. You can see it's even more right here. So when we move forward in time, okay, let's bring in our SARS. All right. Now, yesterday we talked about red light, green light, what Eric taught us. I got the SARS underneath. Okay. What I'm looking for is a flip. Okay. I'm looking for a flip. They have not flipped yet. Okay. Now I have one green on top. Okay. We need both of them on top. Once I get the second one, there we go. There's the red and the green. Okay, red and the green right here. So this is my entry candle. Okay, get in right here. I got in on this trade. I don't think I caught it that high. I was a little bit late to the party. I can give you my exact entry, but the point is I'm trying to show you how this works. Okay, we're gonna make this green for our entry. All right, where's my stop loss go? my stop loss needs to go above structure. Okay, I need to put it above the structure. Now, if you want to be conservative, you could put it above this one. First, if aggressive, conservative, come over here and look at the last high right here. Got it? Got to be aware that this is there as well. Okay, this whole area is reactive, but my stop loss would go above structure. So stop loss is going to be anywhere between about 10 pips to 25 pips. Okay, possibly 30. All right, all within that range. Just depends on your comfort level. I went right here. I had a 10 pip stop loss. All right, so as it moves down, we can continue to see the drop. Okay, what was our first target? We talked about it last night. Our first target is going to be the 15% of the C to D. Okay, so first target was hit right there. Boom. First target hit, and you have a drop of 13 pips that you would have caught in 15 minutes. Okay, just on Eric's strategy. All right, now we got to take off 7. So our entry, let's do this one more time. Sorry, my entry is actually here on this candle. So first move, first take profit would have been 6 pips. That was the most guaranteed move, right? But our SARs are still telling us that it's moving. So I wouldn't necessarily take profit there. It went down to here so far. So let's move forward. I still got the SARs on my side. I had a little bit of a retracement. Let's watch it play out. It's playing around, consolidating, pull back to my entry. Okay, now here's what we have to look at. What type of time frame were we on when this harmonic scan came out? We were on a 30. So here's what I like to do. I like to pay attention to what's now happening on these higher time frames. Once I get in the trade, I start watching these higher time frames. And if I start getting SARs come on the higher time frames, if I get a 10-minute after I already got a 5-minute, that means that this is a bigger move. Okay? Now look at the drop. Look at the drop. Right? I went to bed, and I'm actually a little irritated, but it's okay. I stuck to my goal. I was going for 5%. I hit the target. But last night should have been one where I should have just moved it to break even, which I did, and went to bed. I should have just went to bed because I knew that drop was coming. That was a major drop. Okay, here's what happened. Not only did we get the SARs flipping on the 5 minutes, the 10 minutes, the 30-minute, right? SARs came in on the 30-minute. They also came in on the hour. We had the flip on the hour, green and red above on the hour, and that's why we had this significant drop right here. This significant drop. Let's check the 4-hour. Oh yeah, this. You know how amazing that entry probably was. We'll just have to wait for it to play out. But we have now a SARs on the green, a green SARs on the 4-hour. All right. So not only are we moving down on the 1 hour and below, on the 4-hour. Now what are we waiting for? Waiting for another red and green to come in. Okay. And this could drop pretty significantly. As we zoom out, we could see that this area is very reactive, and we have a long way to go to the floor. This trade could end up going another 300 or so pips down to this next level. Okay, here's another one right here. It still has another 70 pips in that region, another 350 pips here. Okay, so I wanted to just show you guys how powerful those SARs are when you're waiting for that. All right, last night we also talked about waiting for the MACD. Okay, let's look at that MACD really quick. Go back over to the 30-minute because that's where my scan was. What do we have? We have Bollinger Bands. We have one touch, two touch. It's high in our Bollinger Bands. We talked about the Stochastic Crossover. Here it is right here. The green dropped under the yellow, and we've been dropping. Now the green just crossed back over the yellow, and we've been in this buy. Also, we're in the Bollinger Bands, 1, 2, 3, right? So you could have bought this, sold this down, and got in position for a buy. All right. What else do we have? We have our RSI. We already talked about that, but the RSI right here, we had it overbought, right? Overbought RSI. Bollinger Bands extended up, okay? We had the flip. There you go. And then lastly, our MACD. On the MACD, what did we say we were waiting for? We're waiting for the space to be created between the red and the black. Okay, so there we go. We have the fall off of the histogram, right? Got the space, enter the trade, right? Enter the trade. This trade already, if I entered in off of this candle right here, if I would have just did this on the 30-minute, we're entering off of this candle, and we could have wrote it down 120 pips before we got a flip on the other side. 120 pips, 5-hour trade. All right. This is powerful, you guys. I just wanted to give you guys a quick review of what we talked about. We talked about using the harmonic patterns, right? And using that with our SARs and understanding the relationship of the MACD, okay? The MACD. And the Bollinger Bands. You guys, this is going to be a good week. Just stick to your rules. Write down your trading plan. What are you looking for? When I talk about trading plan, I'm talking about your rules, right? What are you trying to get on a daily basis? What confirmations do you need? So for me, I need Bollinger Bands, right? I'm gonna just put BB. I need Bollinger Bands. I need at least 2 hits, okay? I have to have a harmonic pattern. I do. I'm trading all harmonics, okay? And I need to see the red light, the green light, or the green light, the red light, but I need them both on the same side. I need to see the MACD fall off. All right. And I also need to have divergence and it to be oversold or overbought. One of the educators, Steve Greger, in IML Academy or IML TV, he says that he never takes a trade that he doesn't know he's going to win. He never takes a trade that he doesn't know he's going to win. Okay? This isn't a belief for him. It's a knowing. Now, does that mean he wins every trade? No, he doesn't. Nobody wins every single trade. But what he's saying is all the things that he's looking for, they're there. And there's really no reason why he should lose the trade. Okay? And so that's what we're talking about. Putting together your confirmation. Some of you guys like to trade naked. That's fine. If you were trading naked, you'd be looking at this off of the price action, right? And the dojis that were happening at the top. This was definitely a supply zone. We can see the price action all in here, right? If I had to trade this naked and turn everything off, now we're just looking at it from this angle, and what we can see is that this is an area where price reacts. All right, right around here, this whole area right here, right? That's the initial area, and then there's one more right here. Okay, so we have that right there. This whole area right here is reactive. You could pretty much just say this whole space, right? Here's a level, and then here's a level right here. Okay, what did it do? It came down, gave us a teacup, went back up, and dropped. If we would have saw this earlier, we could actually just set a sell limit for right here. Right, sell limit right here, stop loss above, take the drop. All right, I don't want this to be too long, but I just want us to just see how the things that we're going over in the trade house, if we just come and apply them, our lives will forever be changed. All right, be encouraged. You're loved and appreciated. Signing off.